Hey, good evening and blessing to everybody out there. It's your man, Rod Hickman, Generational Wealth Builders, where poverty ends with us. Listen, super glad to be back in the office. Just got back from Vegas. Literally just got back in town. Just got back to Covington. Super fired up. Um, Learned a lot. I'm still processing a lot because we're actually ready to take our business to the next level. Again, in the next few weeks, y'all gonna be hearing about some more things that are taking place, some more things that are transpiring for us to go to the next level to continue to provide the high level of customer service that we do provide to our clients and our business partners. So listen, let me talk a little bit. And again, I'm talking about your retirement, protecting your retirement, please. That's what I titled this one today. In the news this past week, we learned that Yellow Trucking Company filed for bankruptcy. Yep, Yellow Trucking Company, a company worth over $2 billion, has been around forever and forever. Because I remember it as a young boy, has filed for bankruptcy, right? And what had happened was when they filed for bankruptcy, they stopped paying out on their pensions. So I believe it was in July and August, or June and July, folk didn't get paid. People that, hey, Lady Glover, God bless. I'm trying. I promise. Don't gas me up. I think I'm trying though. I'm trying. But what happened was, people who had pensions. So imagine this: you work 20, 30, 40 years for a company. You're waiting on your check to come. Whenever it comes, whatever cycle you denoted for it to come, and there is nothing there, and you keep checking the mailbox, or you keep looking at your phone, looking at the banking app, and there's nothing there. And then you start calling, and you find out all of a sudden that your company has filed for bankruptcy. Can you imagine? Can you just imagine how you would feel? Just put yourself in someone's position right now. How would you feel if that happened to you? Man, I know I'd be ready to put the hands on somebody. I'd be ready to give them these rights and these lefts. I promise you I would. But that's what happened. Yellow Trucking Company filed for bankruptcy. And now I'm not even talking about, and in addition to that, it has ceased operations. So now what that means is if you're a current employee with them, you out of a job. And so right now, 22,000 workers, 22,000 Americans are now out of a job. They are now looking for work. They're now in the unemployment line. Can you imagine that, bro? You just there doing your business, and all of a sudden, next thing you know, they're like, "Hey, fam, we closing the doors." That happened here. I want to say it was last year in Thanksgiving. It happened down in Mississippi. There was a furniture company that coming up to Thanksgiving, they just told the employees, "Look here, fam, we closed. We don't really have nothing to tell you. Don't come back. Hey, if you're a truck driver, if you're out delivering our loads, bro, just drop it off and that's it, bro. You ain't even gotta drive back. We don't want you to deliver it. We're just closing the doors, right?" Now, why am I bringing this up? I'm not bringing this up for doom and gloom, but I'm bringing this up because I need you to protect your retirement. Tell your neighbor, protect your retirement. You need to protect your retirement because here's the thing about it. We've gotten so comfortable allowing our retirement to be in a place where we can't have any control over it. We've gotten so comfortable just giving our money to a system that we really don't know anything about. And so we just expect that one of these old days, when we decide to retire, we're just going to have money to live off for the rest of our life. And that's not the case. It's not the case. And so now these people are finding out about this in with the Yellow Company. So here's a few things that I want to bring up. Now, I'm going to get a little petty because if you know me, you know I'm really, really petty. I love to be petty, but I'm never messy now. You know that. But here's the thing I thought about, and I'm going to share this with you. And I shared the article there for you to read it for yourself. If you read that article, what you'll see is this, is that the company blamed the union for closing. The company said it's the union's fault that we're closing. Why is that? Because the union said we want more money, we want more this, we want more that, and they actually won, and the company actually ended up paying out. Now, The union is turning around and saying, well, we blame greed of the executives. That's the reason why it's closed, right? Here's the thing about it. When it comes to the blame game, 22,000 Americans are now out of work. 22,000 people that were paying for their children to go to school or go to college are now out of work. 22,000 people who were literally funding their lifestyle are now out of work. Why am I saying that? You can't put your money in a place where others can mess off your money. That's why here at Generational Wealth Builders, what we encourage our clients to do is to put your retirement in a place where it's protected and it's going to grow. And that's in a fixed index annuity. You know, I've shown you this time and time again. I've shown you about the fixed index annuity, but I think this is a great time for us to revisit that right now because, again, we now have 22,000 Americans who are no longer, who don't know what's going to happen with their retirement. They don't know. They've given the best of their life to this company, and now they don't know what's going to happen. They don't know how they're going to make it. Well, so this is what the Generational Wealth Builders, and this is how we always and we consistently show our clients how you can put yourself in position to be able to retire comfortably and not have to worry about it. So as you can see from my screen, so let me go down here first. So first off, what you need to know is how much money do you need? Hey, Mama Capers, how you doing? Good to see you. God bless you. So the first thing that you need to know is how much money do you need to live on for the rest of your life, right? That's a very, very simple calculation, or there is a very simple calculation for that. You basically say, how much did I make? How much do I make a year? And you take that and you figure out just a ballpark how many years you're going to need funding. So let's just say, for example, you made $50,000 a year. And you say, I'm going to retire at the age of 65. I think I'll live to about 90, but you want to pad it up a little bit, pad it up for 95. That means by the time you retire, you need $1.5 million in your retirement account, bare bones. Now, this is not accounting for this crazy inflation that we're having right now. And oh, by the way, let me be real petty and say elections have consequences now. And I'm going to go be real petty one more time. Let me stop sharing real quick because I told y'all a long time ago, y'all ain't listening to Rod, that all this raising the minimum wage, I told you all of that was going to create inflation. Nobody listened to Rod. But people deserve a living wage. They do. But who's going to pay for it? That was the question I asked. Who's going to pay for it? Now, guess who's paying for it? We are. And we saw it because now folk working at McDonald's making just about as much money as teachers are. Right? You making $20-something to flip burgers? But either way, I digress. That's not why I'm here. But y'all know I'm super petty, so I just kind of had to get that out there. Y'all know how I do. All right, let's get back to what I'm really talking about. So I'm talking about what I'm talking about. Now, here we go. Bare bones, if you desire to maintain the same standard of living, you need to have at least $1.5 million at the point of retirement, right? So again, now this just depends on, and when we did, let me get it together. When you try to figure out the $1.5 million that you need, we also need to look at how much time you have in order to amass this money, right? So that's where our fixed index annuity products kick in. Now, what I've done here is shown how the wealthy grow money. And the way they do it is, let's just say that someone, a little bit, graduates high school, decides he does not want to go to college. Little Sarah decides she does not want to go to college, decides she wants to go into the workforce. Instead of her putting her money into a 401k because the company matching, if Sarah invests $200 a month into a fixed index annuity, at the age of 67, she will have invested $117,000. However, the amount that she would have to live on is $6.25 million. Somebody ought to say something. Somebody ought to say something. $6.2 million. So her working those years got her more than what she needed. Even if she's not making $50,000 a year, can she live pretty comfortably off $6.2 million? I hope so. Let's say little Johnny goes to college, and after he get out of college and everything else and go travel a little bit, he decides to put $200 a month away. Guess what? Now he paid, if he retired at age 67, he's paid $100,000. Call it $101,000. However, he would have $3.29 million. Again, that's still some good money to be able to live off of. Now, why am I doing it? Oh, okay, let's keep on going. Let's say old Clarence here decided to get started at age 35, putting $200 a month to the side. He'd have $1 million. So again, we see we're talking about 1.5, but you see how, again, even Clarence starting late, he's still closer to that goal. And so all we have to do is say, hey, Clarence, let's add another $100 a month, bada boom, bada bing. Clarence should definitely clear that 1.5 number. Does that make sense? And then if we actually add another $50, I'm sorry, add another $50 to that, he should actually clear that in that time. But again, he's still closer. And then let's just say he gets started late. This is old Jerome right here. Jerome can't get right. So he's invested $52,000, but look now, he got $314,000. Now, simple math tells me that when I sit down with Jerome, because Jerome started late, brother, you got to play catch up. And if you need to get to this 1.5, brother, then basically all we need you to do is just multiply that. So if you think of it like this, you're doing $200, and in that 22-year time period, it gives you $314,000. Simple math tells us if we multiply this, let's divide this. So we say we'll divide the 1.5 by C21. So what this tells me is if Jerome wants to have that $1.5 million, then basically he needs to pay 5 times the amount. So basically Jerome needs to put $1,000 a month to the side in order to get to his $1.5 million. Do you see how I got that? I mean, it's basic math. It's really, really basic math. But these are the things that we're not taught. What we're taught is, hey man, just put your money into a 401k, put your money into a pension, and everything gonna be all right. So let's look at it with $50,000. Let me get up to 50. That's too much. So let's just say, for example, I'm not even gonna do that. Let's just say you're putting in more than the match. Notice you're putting in way more. You put in a whole lot more, but look at how much you have to live on at the end of your time when you get ready to retire. This is what we show people here at Generational Wealth Builders. We show our clients, I know, baby, you were told it's free money, but it doesn't make sense if it's free money that you don't ever get. Because what most people don't know is that at the point that you retire, Uncle Sugar got to come in and get his piece. Yeah, now, I know you thought that money was yours, but it's not. Matter of fact, I dare you, if you're under the age of 59 and a half, I dare you to go and try to take that money out. I double dog dare you. And Uncle Sugar going to tell you, well, look at here, fam, we're going to tax that money at the highest level. Plus, there's going to be a penalty because it's an individual retirement account. But wait a minute, that's my money, ain't it? Is it? Now, I didn't mean to go all there. It just kind of flowed. But what I want you to understand is this. You need to protect your money. Now, you probably say, well, Rod, what about the fixed index annuity? How do I know that that's going to do it? Well, here's what I can tell you. That money is protected. It's an insurance. And insurance is protected. That's what the wealthy know. The wealthy know that insurance is protected because basically they got to put up the money up front. They can't be like on a hope and a prayer. They put the money up front. That's why the only way you can sell life insurance is if you're licensed, because you can't just be out there saying, oh yeah, I sell insurance, and they can't vet it, because again, that money has to be put up on the front side. So this is why we educate our clients. This is why our clients are starting to understand, you know what, man, I'm seeing what you're saying. Our products is that fixed index annuity. When the market is doing good, man, you're making money. Same thing with your 401k. When the market is doing well, you're making money. Period, point blank. Problem is, in the variable market, when it goes down, you lose money, and you lose money in percentage. And it's not the same. It is not the same. When you lose money in the variable market, it is not the same. Because when I say it's in percentage, meaning, let's just say you have $100,000 for easy math sake. You have that $100,000. If the market goes up 50%, you now have $150,000 in your retirement account. And that's good money. 150. You had started with 100, you gained 50%. That's great money. That's why people put their money in the market for the growth. But here's what you have to understand. If that market loses 50%, and when I'm talking about the average rate of return. If over that year, a market has lost 50%, now you're down to $75,000. You're not back to your 100, you're down to 75, because it's just like taking your money and going to Vegas, where we just came from. And I can't tell you, let me say this, and y'all know me, I just got to say it. I am mystified at how people will do things to get wealth that really won't make them any money. What am I talking about? So there was a time when you went to Vegas, when you rolled the dice, you had a good chance of winning, right? And put your money in the slot machine, you know, and you can get your money back. Well, guess what? Now the stuff is digital. So doesn't it stand to reason that they can set that machine to do enough to keep you engaged? You start out with $100, you win 15. You ain't going nowhere. You locked in. Oh, I done came up. Let me keep on keeping on. They show you the jackpot and all that there. Yeah, I'm getting close to it. You lose 35. Then you come back up, you gain 25. You like, oh, my luck is coming back. And you stay right there. Oh, now it's this. It ain't even pulling no more. It's this. You stay right there. How much money are you throwing away there? How much money are you throwing away there? Trying to get rich quick. Not even realizing the system is rigged. Just saw that. I thought I'd throw that in there. Because again, our mentality to growing money is wrong. Our mentality of growing money is always on a gamble. And that's not how you grow your money. You grow your money by utilizing what is known as the eighth wonder in the world in the finance industry, which is called compound interest. Meaning you let time, you get a higher rate of interest, and you let time work for you. And what will happen is, over the course of that investment, time is going to make sure that your investment takes off. Period and point blank. Period and point blank. That is the value. That's if there is a get rich quick scheme, that's it. If you want to gamble, that's where you want to gamble. You want to gamble somewhere where your money is safe, as well as you're getting a high rate of return. And I can't understand for the life of me why people steadily keep putting their money into a 401k. When, if you notice, let me go back here and I'm gonna be done, because it's been a long day, y'all. That's why I was kind of spinning a little early, but y'all just pray for me. Don't laugh at me. Now watch this. Notice this annually is way more than this $2,400. But yet and still, look at the return. And notice what I did here. I just said you had a 5%, 5 to 7% yearly withdrawal or distribution. You took your first distribution of 5 to 7%. Look at here. That's still more than what this individual is going to have. Period. Do you hear me? Period. And then, God forbid, watch this now. If this person should pass, guess what happens? Their family will inherit whatever is left from this money here. Y'all ain't saying nothing. The family would inherit what's left. Can you imagine being able to leave your family millions of dollars? Being able to start a trust? Don't you know one of the things that the Rockefellers did is that when people died, they put money to the side. And so then when somebody wanted to start a business, they said, hey, okay, bring your business plan. What you going to do, fam? Well, look at here. I'm going to make these widgets and I'm going to do this, that, and the third, so and so and so. I need $200,000. 200 grand? That's the first Shark Tank. Child of mine, that just came to me. That's fresh. Don't nobody steal that. That's me. That's the first example of Shark Tank. What, how much you need? Okay, that sounds like a good plan. And they write them a check. They give them a loan. And they can pay that loan back 0%. But we wonder why we're passing on poverty to our families. I ain't even going to talk about life. Well, yes, I am. I'm going to talk about life insurance now. Life insurance is the great equalizer. People don't even believe me. People think, well, I got it at my job. Guess what? Them people at Yellow, guess what they're going to have to do now? Now they're going to have to come and try to find life insurance. And guess what? If they've been there 20, 30 years or whatever the case may be, and now, they got some author messing with them and they got the gallery, they got something else. Guess what that's going to do? That's going to drive up the rate of their insurance because they just put all their eggs in one basket. So not only is their retirement messed off, but now their life insurance is messed off. But I'm going to get another job. Remember, that job is only going to let you get so much life insurance. And guess what? You can't take that life insurance with you when you leave. So the question I always ask my clients, and again, people that know me, and they appreciate the fact that I'm making them think and I'm not allowing them to make the wrong decision. But the question is, so you plan on dying on the job? Because that's the only way you're going to be able to take that thing with you. There's a very small percentage of people that get to take their life insurance with them, a very small percent. Most of them are government employees. And again, very few private companies will allow somebody to do that. But my point in that being, this is why you have to protect your retirement. This is why you have to protect your investment. If you are not working ardently to protect you, then guess what? You can't be mad when you're not taken care of. You can't. You can't. And trust me, folks, I know because I've dealt with so many people, and I hear the same thing. So many people are afraid of getting rejected for life insurance. So many people are afraid to even inquire about life insurance because they're like, well, they're gonna take me to the cleaners. No, baby. When you find somebody that you can trust, somebody that you know, they'll tell you the truth, and they'll make sure that you clearly understand what you're going on, what you're getting into. And so I would say to you, find you somebody that you can trust. I would love to sit down and chat with you. I don't care where you are. Let's just sit down and chat because of health issues. But here's the thing, Mama Capers, there are a lot of health issues that you can still get life insurance. I mean, I'm talking about good life insurance, and it doesn't cost as much. But that's where you have to sit down and talk with people. For example, probably the thing that I tip my hat to the most is that I helped a 62-year-old man who has type 2 diabetes and has a history of neuropathy. And we still got him approved for a $250,000 life insurance policy. $250,000. That's what he wanted. My point being, when we sat down and worked it out, it's all good. We have clients that have had the gastric bypass, high blood pressure. We don't even really care about that. Again, unless you've been hospitalized for it, then we just kind of need to see that it's been stabilized. But still, what I'm saying is it's not like you'll get declined. There may be a risk factor to it. So they may add a little bit more to the premium. But we can still get you covered is the primary point that I'm driving home. But thank you for that. because of health conditions. That's why some people don't even do it. And again, I can understand. But again, that fear will cause your family to be in poverty. And here's how I feel. There is no thing that will cause me to not make sure that my family is taken care of. No thing. I don't care what it is. And so if that means I have to go through it to make sure that my family's taken care of, so be it. I will do it, because when I close my eyes to this world, I want the Hickman legacy to live on. And I want them to live on and not be like, darn, man, this dude left us off bad. But you know what? We miss him. But he left us off in the same manner, if not better, than he was if he was here. That's what my family's going to say. I'm telling you, that's what my family's going to say. Because old Frank ain't going to be able to slide up to Sister Hickman like, hey, there, you all right? No, he ain't going to be able to do that. And if she decide to go with a broke joker, then again, it won't be said that Hickman left her off bad. Can you believe how Hickman left her off like that? It won't be said. But how many people are going through that? And then I'll say this and I'm gone. But then, hey, Freddie, how we doing? But then, here we go again. Our life insurance policy, because again, it's not always the fatality that brings families into a bad place, but it's also sickness. And our policies have what's called living benefits. And what those living benefits do is, God forbid, if someone is diagnosed with a critical, a chronic, or terminal illness, they have a heart attack and can't work, a stroke and can't work, cancer and can't work. They come up with something where they cannot do 2 of the 6 activities of daily living. They can't feed themselves, bathe themselves, get out of bed, handle their own business, all those kind of things. If 2 of those they can't do, 2 out of the 6, the insurance company gonna come in and say, hey man, sorry about what you're going through. Say you got a $500,000 policy. Here, $400,000. Go ahead on, fam, and get better. You ain't got to pay that back. And oh, by the way, you still got this $100,000 death benefit just in case you pass on. But here's $400,000 for you and your family right now. Because let's put this into perspective. If you got a husband and a wife, a boyfriend and a girlfriend, whoever, whatever, they're doing everything now. But if you got that family unit there, and you got 2 incomes coming in, or if you even got 1 income coming in and something happened to that breadwinner, guess what's going to happen? That whole family is impacted. Let's just say you got 2. Let's say both of them are bringing in $50,000 a year. I'm just pulling that number. So right now, your bills are going to be somewhere about $75,000, $80,000. So 1 paycheck is not going to make all those bills. I know what I'm talking about. If you got 2 incomes, most people are not living off of the 1 income. Most people, if they have 2 income, the husband got the house and the car, the wife got the car insurance, maybe the utilities and the cell phones and all that. That's what I'm talking about right there. And so what happens is, based on your income, that's how you set up your budget, which I could go into a whole nother story about, but I'm not, because I'm getting ready to get off in a minute, I promise. Now, here we go. If you got 2 of them bringing in $50,000 and 1 of them now can't bring in that $50,000, now this family is already struggling. But if that person is down sick, guess what that means? That means now that the other spouse ain't going to be able to go to work like they were. Why? Because they're going to be there with their loved one, right? They got to take care of their loved one. And if they have children, young children, guess what? Now the whole dynamic of your life has changed. But here we go again. Going back to Vegas. We love to gamble. How many times I've been on here talking about, hey, we got these living benefits, get these life insurance policies and all that there. Come on, man, get these life insurance policies. and stuff like that in case something happened. Again, the insurance company gonna write you a check, and people still don't listen. And then when life happens, again, now you're on the charity of other folk, and you're on the charity of folk who are already pinching pennies. You're on the charity of folk who are already like, man, shoot, that gas better not go up. I'm gonna have to get me a skateboard to get to work. You get what I'm talking about? We're doing all these things, gambling when there is a sure bet that you could tie into. And it's life insurance. I don't know how else to say it. I'm pumped up because of where I've been. And what I can tell you is, it may come off a bit aggressive. That's not my nature. But I'd much rather tell you and than for something to happen and you say, Rob, why didn't you tell me, bro? Rob, why didn't you tell me, bro? I would much rather give you this shock and cause you to be like, man, you know what? Shoot, look at him. Than for you to go on and me not even touch it, like, nah, man, it's all good. And then something happened. Now I'm sitting here like, darn, they could have used those living benefits. Nope, won't happen to me. I love to sleep well. I love to sleep with a clear conscience. And that's what I'm going to do. And so that may make some people feel uncomfortable. If you're uncomfortable, come talk to me. I promise you, I'm not that guy that you can't talk to. If you could ask anybody, we can talk, I promise you. Let's sit that what the Bible say. Come, let us reason together, saith the Lord. Right? Come, let us talk about it. And I will show you. We'll sit down. We'll look on the system. I will show you. I will print up anything that you need to see in order for you to feel comfortable about making sure that your family is protected. Your family is protected. Well, I started out talking about retirement, ended up on life insurance. But again, it's because I believe in these products. I believe so strongly in these products that, again, here's the thing. I don't fear death because I'm saved, because I know my heart is with the Lord. But here's also the thing. I don't fear if anything should happen to me. I pray it doesn't. I love being able to do what I do. But here's what I can tell you. If something happens, then I know that my family's taken care of. I know that we'll be taken care of. Why? Because my multiple insurance policies going to kick in. And so now we'll have the funds to do whatever it is that we need to do. That's what it boils down to, folks. And so wanted to get on today because, like I say, I've been off for a minute, had a wonderful time in Vegas there with the portion of the generational wealth builders that met us out there. Super proud of them. Super proud of them. I can't really articulate how heartfelt and godly proud I am of each one of them for investing in themselves, for catching the vision and wanting to be a part of the Generational Wealth Builder organization. So we're super excited. But again, that's my time for today. I love y'all. Y'all know that already. I love you enough to tell you the truth. That's what I'll always say. I love you enough to keep it 100 with you. I love you that much that I will never, ever hide anything for you. And I'll never do anything just for $1. I'll always, always, always make sure that you know how you can make sure your family is taken care of. As a pastor, it breaks my heart when I find families that aren't properly protected. It breaks my heart when we have to go to the hospital because somebody's in the hospital and down and out and this, that, and the other. And again, you have to try to scrape up and be like, here's $250. But what's $250 going to do when they're having to replace their whole income? But I tell you what, and I thank God, let me knock some wood, that none of my clients have had to utilize the living benefits. But guess what? If they have to, it's there. If they have to, it's there. And so when I show up on the scene, I'm showing up with a check in hand. Hey, God bless. Sorry about what you're going through. Let me pray with you, but also let me put something in your hand now. Let me make sure that you and your family are taken care of. While you get better, let me make sure that you and your family are taken care of. That's it. That's it. That's it. You're not going to find very many people like that, because most people look at you and they're going to give you something just to make a commission. I can't tell you how many times I've gotten mad and wanted to clock some people upside the head for the policies that they've given people. They've given people policies $10,000, and what's $10,000 going to do? And for what they're paying for that $10,000, I can get them $100,000, $200,000. That's what I'm saying. Plus my living benefits, because they don't offer it. Plus, I can give them a cash value policy. I can give them permanent policies. I can give them a policy that turns around and give them their money back when the policy is over with. That's what we do here at Generational Wealth Builders. So, love you all so much. Y'all have a good day. God bless. And we'll be talking at you soon. All right. God bless. Bye-bye now.